Welcome to the latest podcast of FJP Investment. Today we're going to take a look at 5 considerations for when investing in UK property. If you're looking to invest in property, now may be the time to consider doing so. With buy-to-let mortgages at an all-time low, with property prices looking positive, as these figures are going to show. Buy-to-let mortgage rates are currently standing at 3.96%, which marks the first time that the rate has fallen below 4%. And UK residential property values are forecasted to increase in 12% in the northeast and up to 21% in the southeast within the next 4 years. So what do you actually need to think about before you invest in the UK property market? Here we're going to look at 5 considerations that will help you make informed decisions when you are set on the path to property investment. Number 1, what are your long-term plans for the property? The first consideration will influence the type of property you actually buy, and where, and possibly even the type of mortgage you may require. So this needs to be carefully thought. For example, do you see your investment property as somewhere to rent until such time the capital in the property has grown and that you can make a healthy profit after tax deductions, of course? Or do you intend to buy to let the property and eventually it will become your permanent home once you retire? If it's the first option, to make a profit, then you'll need to decide if you're buying locally and so that you have all the benefits of having a property you can keep an eye on, or investing in an area where property prices are forecast to increase, meaning you'll typically need a lettings agency to manage the day-to-day running of the property. If your eventual plan is to buy a property that you're going to rent out now and retire to several years down the line, then no doubt you'll choose an area you are familiar with. Many people dream of retiring and living by the sea, so you may end up buying a property on the coast somewhere. And with that, it throws up another consideration. Are you looking to use it as a holiday home rather than let it to full-time tenants? If so, then you'll need to be aware the different mortgage lending criteria, as obviously you're going to need a holiday let mortgage, which is different to a buy-to-let mortgage, as well, of course, the insurance requirements and tax implications. Once you have decided the long-term purpose of your property, you can look at the financing of it. You may have a choice of options depending on your own unique financial circumstances. If you require finance, then obviously you'll need to note that not only do different mortgage lenders charge different interest rates, but they also have different lending criteria, with most buy-to-let mortgages offering a loan-to-value of between 60 and 85% of the property value. Seeking specialist mortgage advice may make sense to ensure you get the most suitable and cost-effective option for you. Alternatively, of course, you may have an existing property portfolio and perhaps you'll look to remortgage one of those investments to fund the next property purchase. Or perhaps you'll be looking to invest in property in a completely hands-off manner, in which case, ignore the rest of this podcast. It's not just about investing in bricks and mortar that you need to check for affordability. There are lots of other costs involved to think about. Buying costs, surveyors, solicitors, etc. The ongoing costs, insurance, tax implication, letting, management agency fees, etc., etc. When working out the affordability, you need to factor in these costs. You also need to allow for periods when the property may be standing empty, for example, when awaiting a tenant or the property is undergoing refurbishment. Are you financially comfortable with all of these ongoing costs? Would you still be able to comfortably afford to meet the mortgage payments if your investment was empty for several months? So once you feel satisfied that the costs all fit within your budget, you need to think about your target tenant. For example, are you looking to buy a small flat in the centre of the town that may be suitable for young professionals who commute or work locally? Or perhaps you're going to want to invest in a student town and take advantage of the potential abundance of student tenants who will be right on your doorstep. In addition to this, if you're a full-time property investor, then you may have already decided that you want to manage the property yourself. On the other hand, you may want a lettings and management agency to do all of the legwork, such as finding the tenant, checking they can legally rent your property under the government's right to rent scheme, or even making sure that your property complies with legislation, dealing with the day-to-day running costs, etc. Or you can decide this for yourself. It's only you. You may want the agency or not. If the former, you'll need to factor in fees, typically 10 to 15% of the rental income. If the latter, make sure that you feel confident of keeping up to date with ongoing landlord legislation, as well as being on call should a tenant have any problem. And that's the key, completely hands-off investments. I mean, hopefully the 5 tips that we've just given you will help you to make a decision about investing in the UK property sector. The one other option that may be attractive to you is using property as an alternative investment, compared to other investment vehicles such as stocks, shares, gilts, etc. If you wish to take advantage of investing in property in a completely hands-off manner, i.e. you just simply want to put your cash in, it's in a development, it's managed for you, this may well suit your budget as well as your attitude to risk. And there are specialist companies to help you with that. They will typically offer ways in which you can invest, and they'll match investors with developers and properties, and potentially you'll also see the benefit of investing in bricks and mortar, of course, without the hassle and costs associated with buying and letting out a property. For more information on this topic, go to the website www.fjpinvestment.co.uk.